Joining me now for a closer look at what's playing itself out in that market scene is Annatjie Van Rooyen from My Wealth Investments. Annatjie, pleasure. Good afternoon to you.
Good afternoon. Thank you for having me.
All right, it does look like markets are having a fantastic Friday. Let's talk about that. I did read about renewed hopes of interest rate cuts. It's not what the Fed has said, but the markets seem to still be cheering that sentiment on.
Yes, it's all about the US and the possibility of interest rate cuts coming up in the second half of this year. I think, with the jobs data that's come out last Friday and also yesterday, that increase in the jobless claims, that is definitely giving investors hope that that interest rate will get cut pretty soon. And we've also seen pretty dovish comments from the BOE yesterday. So if you have a look at the reactions in the currency and the bond markets, it definitely looks like this interest rate cycle is about to turn pretty soon. And that is good for risk assets, of course. But you can't base your projections on one set of numbers only. So one's got to be careful. And next week's an important week because we have US CPI coming out. So we'll be monitoring that number very, very closely.
I must ask, Annatjie, the US Fed and various speakers from the Fed have actually come across a very, very dovish. They've been, hawkish rather. They've been very clear on the fact that we were expecting fewer than what we had initially anticipated in interest rate cuts. I think some of the speakers from the Fed have even said possibly no cuts this year. And so I'm a bit keen to get your thoughts on what exactly is driving this market sentiment here. Are we placing more value on Fed speak, which we anticipate every time it emerges, or are we placing more value on the data?
I think it's definitely more focused on data, Nolitando, because if you see the reaction of the market every time that the US come out with macroeconomic data, you see the reactions in the market right away. Even the UK markets are paying more attention to the US data than what their own data, I would say, at this point in time. So there's some pretty crowded trades out there in the currency market right now. So yes, I think it's definitely more dependent on data. And we have been receiving mixed signals from the Fed speakers, but it's almost like they have less confidence right now in disinflation than the BOE, which was very dovish. But as soon as we see these signs that the job market is cooling, we immediately get very excited because that is what Jerome Powell has been saying all along. He wants to see that job market cooling. So even though one set of numbers is not good enough for them, you can clearly see it's good enough for markets right now because all the markets are reacting positively to that news.
Brilliant, Annatjie. Let's also talk about oil. The oil price ticking higher, sitting at around $84 a barrel. And that's on data that has emerged showing that both the US and China are seeing an uptick in demand. I think that's very, very interesting because it does, of course, counter the conversation we've been having about a global macros downturn.
Yes, it's about time now that we see some increase in the demand from China. We've been waiting a very long time for that to happen. And as we see the travelers getting back into it and also gearing up for the traveling into the summer holidays, I think, the possibility is there that we can see a further uptick in that oil price.
Keen to get into some company news with you now. Of course, we've been waiting anxiously for some sort of an update around the BHP and Anglo's conversation. What we are hearing of now is Botswana as a country coming out to express their desire to protect De Beers. It does, I think, speak to an additional layer of complexity around what might happen with Anglo's and its future.
Yeah, I'm not aware of that, unfortunately. But all I can say is that we are invested in Anglo's and we are patiently waiting because we have a very nice underpin right now at the 600 Rand per share level. And not so long ago, Anglo's was trading at a high of 760 Rand. So BHP has until the 22nd of May to come through with that offer. And we've also heard speculation that Glencore is in the running as well, but we haven't seen any formal offers yet. I think the bottom line remains that Anglo American is a diversified mining house that has been trading at very undervalued levels for too long now. And that is what happens when your share price is undervalued. Then, your rivals try and pick you up at a bargain price. And that's exactly what's happening here.
Also keen to get your thoughts on news around Sibanye and them being in conversation with lenders as the platinum price continues to challenge them. Just how much debt is sitting on that balance sheet, Annatjie, that is worth these conversations at this point?
Yeah, I'm not invested in Sibanye, Noletando, so I can't tell you exactly how much debt is on that balance sheet, but the share price is actually doing quite well today. That is because their production update looked very good. Their production was up 11% in the US. They beat expectations. And also in their cost savings, they were able to get a cost saving of 18%, which is also much better than what the market expected. And other than that, Johnson Matthey, the secondary refiner in the PGM market, the largest secondary refiner, they have also published their report, and they have indicated that platinum will move into a deficit, the largest deficit, in fact, that we've seen in the past 10 years. So I think all of that actually, there's more positive than negative right now for Sibanye. They're not the only commodity producer that's been battling with lower commodity prices on the back of lower demand from our main trading partners. So I don't foresee any problems and that they'll have difficulty with the banks to negotiate new terms.
All right, and keen to get your stock pick in a bit, but first I'd like us to reflect on counters that have found favour with your industry peers.
So I still think South African stocks in general are undervalued, and I like the banking sector. Yes, there is risk, but they're very well across the whole sector have got very, very strong balance sheets. They're paying really good dividends of between 4 and 7%, between which bank you look at. So I picked FirstRand here. I think that you can get a 14% return from around these levels, and I think it's a defensive play. And if we have a good outcome in elections, I think you could even do better than that. So my stock pick is FirstRand. They sit in with a really strong balance sheet. They can manage their non-performing loans well, and they've got a diverse business. So, my pick is FirstRand.
My stock pick for today is Prosus. Grant mentioned it earlier in terms of Tencent and the positive prospects, but I think that underlies the investment case. And we do have a very positive view on Tencent. Certainly the valuation looks very reasonable on 13 times forward PE ex associate investments. For us is extremely reasonable relative to mid-teens earnings prospects over the next 3 years at least, given some of the margin opportunities and the additional revenue lines that they can take. Obviously, a large buyback at the 10-cent level and a much increased dividend is positive as well. That feeds through into the Prosus investment case. Discount has widened over the last couple of months to the level we think is back to an attractive point. Is a new CEO likely to be appointed, confirmation at least by the end of June. So I think that will remove some uncertainty in the investment case. We should get better guidelines in terms of the strategy going forward and some of the capital allocation prospects. But certainly we expect lower losses from the e-commerce portfolio, the continuation of the buyback, and hopefully crystallizations of some investments to come through to help support sentiment around where the discount is. So Prosus, our stock pick.
I'm going with Airbnb. They reported last night a little bit. The market has had a bit of a pullback, and I think that's a great opportunity. This is a company that's moving into significant operating leverage. As their revenue grows, they've got very little capex required. As we see the Chinese consumer recover, their outbound travel is going to drive some travel growth as well. I think this company is incredibly cash generative, and it's going to get even more so. So it's a very exciting story. I think they've got a long growth runway, high free cash flow business, and I think it's a great opportunity. If we see a decent pullback now, I would hold it for the long term, accepting that there will be cyclicality along the way, but it's a good story that I like.
All right, Annatjie, keen to get your thoughts on some of those counters, FirstRand, Prosus, and Airbnb.
Yes, I agree with all of them, actually. First of all, if we look at FirstRand, the whole banking sector on the JSE, I think is offering very good value in terms of valuations and dividend yields. Banks have strong balance sheets, so definitely agree with the investment case made for FirstRand. And then in terms of Prosus, Tencent results are coming out next week, and Prosus, of course, has close to 27% stake in Tencent. We're expecting adjusted earnings per share increase of 33% coming through next week for Tencent. So despite the fact that Tencent will be reporting, we also know that Tencent's trading at a discount to its net asset value, so that bodes very well for the investment case for Prosus, plus the fact that they are operating in a more accommodative regulatory environment in China right now. So I 100% agree with Prosus. It was my previous stock pick as well. And then Airbnb, I had a look at that chart and some of the SENS announcements around that stock, and I've noticed that pullback in the share price. That was probably on the back of the first quarter results that were on the soft side. And now I'm lying. The first quarter result was actually very strong, but management guided for a softer second quarter, and that is why that share price pulled back. So it is a cyclical stock, but I think they're well positioned to benefit from an uptick in traveling as we approach the summer holidays. So I agree with that one as well.
Well, that's it, Annatjie. Which counter are you going with this afternoon?
I'm going to go with MTN, Malatando, because MTN, it's still a company with 295 million customers, and a strong balance sheet. They still have a strong management team. They've been battling with currency devaluations in Nigeria, but this management team has been able to steer this company through very difficult times, and they've done it successfully. And I think what makes MTN so attractive to me is the fact that they still have the possibility of an unbundling in the future because MasterCard bought that stake in the fintech business. So that to me makes the company very attractive, plus the fact that they're en route to reach their target of 25% return on equity. I'm happy to invest in a company like that.
Thank you so much for your time this afternoon. And again, it's been a pleasure hearing from you. That was your midday markets update with Annatjie Van Rooyen from My Wealth Investments.